In this week's episode, we're going to discuss something we've actually discussed before, but it keeps coming up, and that is, should you take the benefit that you get from your defined plan, like a pension type plan, a defined benefit plan, like a pension plan, should you go ahead and take the options that they are offering you, whether it's just for you or for you and your spouse at 100% or 50% or 75%, with the 1 year partial payouts or 2 or 3 or 5. There's a whole bunch of different options. What should you do? Well, we're going to talk about that. Let's roll.
Welcome to the Safe Money Retirement Show with your host, certified financial fiduciary, Tim Wood. Tim is a retirement and income planning expert, best-selling author of Safe Money Retirement, Your Game Plan for Success, member of the exclusive Ed Slott Master Elite IRA Advisor Group, and founder of SafeMoneyRetirement.com. Tim uses an education-first approach with clients nationwide to ensure they understand their choices in planning their own safe money retirement. Tim focuses on wealth management, retirement income, tax and long-term care planning, and asset protection and growth strategies. And now, from the Safe Money Retirement Studio in Johnson City, Tennessee, your host, Tim Wood.
Welcome to the Safe Money Retirement Show. I'm Tim Wood, a certified financial fiduciary and asset and retirement protection specialist. Making the decision about what you're going to do with your pension in retirement is huge. And for anyone that has faced that dilemma, that challenging situation, when you get anywhere close to retirement, they send you a form with multiple options. There's single life, there's joint life with your spouse at 100% and at 50% and maybe 75 and 25, or there's a single lump sum. What should you do? What makes the most sense? What's the wisest move for you moving forward in retirement? That's what we're going to discuss today. But first, if you don't already have a copy of my book, Safe Money Retirement, Your Game Plan for Success, what are you waiting for? We will send you a copy absolutely free with no charge and no obligation so you can start planning your own retirement by knowing what's available out there. Just give us a call. It's toll free from anywhere in the United States, 1-800-913-SAFE. That's 800-913-7233, or just log on to our website at safemoneyretirement.com and request your free copy right now. So if you've got a pension plan, what should you do with it? What's the wisest thing to do when it's time to make the decision of how you want to start using that pension plan that you've built up over the years, working for whoever or maybe multiple places? What's the best thing to do? All right, so let's look at the different options. So the first option you've got is you can just start taking a lifetime payout from that pension plan. Let's just call that option number one. You can take that however you want. So you're going to have multiple different options, and someone like myself would be happy to sit down with you and go over all of those options and figure out what makes the most sense. First option may be just for you. So they'll pay you X dollars for as long as you're living, just to you, but as soon as you're gone, poof, that money's gone. Option number two may be for you and your spouse, and then you have to determine, well, do I want my spouse to get 100% of what I'm getting when I'm gone? So in other words, if the payment's $2,000 a month, it's going to be $2,000 a month as long as either one of us are breathing. Or do you want to go down to 75% for her when you're gone, or him, not necessarily, or 50% or 25%? There's all kinds of different options. You need to sit down with a retirement expert that can help you figure out what makes the most sense out of all of that. Now, in most, not all, but in most pension plans, another option is for a lump sum. Now, if they're going to offer you a guaranteed income, why would you possibly want to get a lump sum? Here's why. Because what we will do is first we'll get all of those options from the pension plan. So single life, joint life with you and your wife, all the different options. Let's get all of that down. Okay, so now we know what they're offering. Now we can take that lump sum and we can shop it with top-rated life insurance providers that offer guaranteed lifetime income annuities, which, by the way, pension plans are nothing more than that, okay? So what we need to do is figure out what is that lump sum going to be that you can get from the pension plan. When we know that number, now we can go shop the marketplace, all the top-rated companies in your state, and we can see, is there something that's going to be able to beat what your pension plan is paying you? And 90+% of the time, we can. Sometimes we can completely blow it out of the water. But there's even more things to think about than that. So that's the number one thing that we look at, because we want to make sure that we're getting you the most payout that we possibly can. Every once in a while, I do see one that the pension plan pays more, and I suggest that the person stay in the pension plan. Then we just need to determine, do we want it to be just for you or for you and your spouse? And if so, what percentage? All that, and I'll help with that. But in most cases, vast majority of cases, you can get more payout and more benefits coming from an outside company than from a pension. So I'm going to talk about that in a second. But first, I kind of want to take a quick detour. Another one of the big benefits is actually getting out of that pension plan. Because I'm sure you have seen as well, there have been many, many cases where pension plans have gone under. And if the pension plan goes under and becomes, non-solvent, you're done. There are some things there are some remedies that you might have a possibility of getting some of that money back. And there's all kinds of things that possibly could be. We want assurances. We want to know. So getting out of for some people, getting out of pension plans and getting with a top-rated life insurance company is a benefit into itself. So I wanted to mention that. But there are some actual real benefits, even if you disagree with that statement and you're like, no, my pension plan's fine, it's not going anywhere. Okay, great, that's fine. But with your pension plan, if it's just for you, as soon as you die, it doesn't matter if you die 2 months after that pension plan's turned on, all that money's gone. If it's for you and your spouse, as soon as the last one of y'all stops breathing, it's gone. Doesn't matter how long it's been on. Could be a year, and you had $500,000 in there. Well, you got a year's worth of payments. The company now just probably got $450,000 of your money, and it's gone. Poof. That's what funds everything else in the pension plan. That's kind of how they work. In income, lifetime guaranteed income annuities, anything that would be left in that plan would go to whoever you've named as your beneficiary. So you don't have to worry about, God forbid, something happened to you in the short term. Anything left in that account would go to your beneficiaries. Now, there are some other benefits that certain plans have. Some don't, some do. We have to look at each one individually. But for example, some of these lifetime income plans also include an income doubler when you get in a long-term care situation. Pensions don't do that. So there are some big benefits, but again, we've got to bring it back and look at what's going to pay you the most. If it's still going to pay you more to be in the pension plan, it still might make sense to stay in that pension plan. And I'll tell you that if it does. But in most cases, we can get you a higher payout with not having to worry about if y'all both pass, if you do it, or if just you pass, there being nothing going to beneficiaries, and in many cases, having that long-term care doubler that can double the income. What do I mean by that? You get in a long-term care situation, or if it's set up with you and your spouse, either one of you get in a long-term care situation, that income can double. Instead of being $2,500 a month, it's now $5,000 a month for a certain period of time, as long as there's money left in the account. And I would explain everything. But there's certain benefits, and that's why you need to shop. That's the whole purpose of this segment. I don't know what's going to be best for you. We've got to shop and see. Just like everything else that we do, we shop and see. So we need to get the printout from your current pension, what your options are. For you and your spouse at the different percentages, for the different options for just getting lump sums one at a time or up to 5 payments or whatever it is. Get all of that. Then we can shop outside companies and compare. Then we've got both things right in front of us, and we can sit down, whether it's in person or it's over Zoom or whatever, we can sit down and compare because we've got both of them right in front of us. We can decide what's going to make the most sense for you moving forward and get you the best payout from your defined pension plan. Well, I must take a short break. This is Tim Wood, and you're listening to the Safe Money Retirement Show. Let's pause for some exciting announcements.
We all know that friend who's retired and still has to work. The one we've said we won't end up like, working till we die. But are you sure you're prepared? Hi, it's Glenn Beck, and I want to introduce you to Tim Wood. He is the owner of Safe Money Retirement. He's a certified financial fiduciary, and he makes sure that his clients aren't going to be that guy. Tim can help you know you'll have enough guaranteed income to cover you and your spouse for as long as either of you live and protect your money from the next market crash while it grows. Tim's helped hundreds of families know that they have a plan they can count on. You know I don't just trust anyone. Do your own homework with Tim Wood. Go to safemoneyretirement.com/Beck or call Tim. See how Tim can help protect what you've worked so hard for all those years. A safe retirement. Go to safemoneyretirement.com/Beck or call Tim and protect your money from the next market crash while it grows.
You're listening to the Safe Money Retirement Show with your host, Tim Wood.
Welcome back to the Safe Money Retirement Show. I'm Tim Wood, a Safe Money Retirement Specialist. In today's case file, we are going to look at one of my all-time favorite clients, Clarence and Louise. So Clarence and Louise came in. They were absolutely the sweetest older couple. They were in their upper 70s, and they had some significant assets, and they actually had some CDs that were coming due and wanted to figure out what to do with them. So we sat down, we looked at all the different options. First, they did not need any income at all. They had plenty of income. They had excess income, actually. They were good on income, didn't need it. Plus, they had assets they were having to pull their RMDs out of, which gave them more income, so they were fine on income. We also talked about the fixed index annuities that y'all hear me talk about that you can actually reallocate every year and choose how you want your money to grow. But they really didn't want to mess with that. They were getting up in age. Their, mentally wasn't 100% like it used to be. I mean, neither one of them have any major problems, but they were getting up, and every year it was a little harder to remember things and do things and keep track of things, especially numbers. And I remember multiple times they did this, both of them in the meeting. So what can we do in that situation? So what we did for them was we got them into products. They actually act very much like a CD. They are what's called a MYGA, a multi-year guaranteed annuity. And they work very much like a CD, but typically have pretty significantly higher rates. They work for a set period of time at a set rate with no fees. So for example, you could do, let's look at a 5-year plan using X dollars is going to pay X, whatever the rate is that day. And I've got a program actually searches all of the top rated companies in a state so we can look and see what's going to be the best. And that's what we went with. That's what we did for them. They had multiple things. It wasn't all at one time. This was almost like a multiple appointment type of a deal. First appointment, we had that one CD that was coming due. We just moved the money out of that CD and into one of these. They made significantly more money, no chances of losses, no fees, knew they were going to make X percent for X number of years, and they didn't have to think about it. And then as their other CDs came due, they did the same thing. They'd call me up and say, I've got another $100,000 CD coming due. It's actually going to be $108,500 when I get it. What should I do with it? Well, how long do you want to put it back in for? Do you want to do 3 years, 5 years, 10 years? There are some benefits to doing 10 years because you could lock in now and get a good rate guaranteed for 10 years. They did that. So they both left very happy. They know they don't have to think about what the growth is going to be. It's just guaranteed. It's locked in. Plus, on some of those, they can actually take some of the money out, either the interest or in some cases up to 10% if they ever needed to. Doubt they'll ever need to, but if they ever do, it's there. but they don't have to worry about making any changes. It's just locked in. And then at the end of the term, they'll do something else with it. Kind of like rolling over CDs, but it's in a product called a multi-year guaranteed annuity. They both left very happy, very calm, knowing they didn't have to worry about anything moving forward. Well, I'm about out of time, and I would like to thank you for listening to the Safe Money Retirement Show. If you're serious about your financial future, give me a call and together we'll get your retirement savings on the fast track to accumulate while reducing exposure to market loss. Thanks for listening, and until next time at the same time, I'm Tim Wood reminding you to stay safe so you can step into a secure future.
You've been listening to the Safe Money Retirement Show with your host, Tim Wood. Find out how to contractually guarantee that your income in retirement is guaranteed lifetime income and not if-come. Avoid any future market losses, plan for the potential of long-term care, and make wise planning choices so you can have the retirement that you deserve. Call us now for your free copy of Tim's best-selling book, Safe Money Retirement, Your Game Plan for Success. Our toll-free number is 800-913-SAFE. That's 800-913-7233. Or log on to our site at safemoneyretirement.com for more information or to request your free book. Thanks for joining us. We'll see you online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Obviously, by contacting us now, you are only taking the first step toward protecting your retirement. No information presented today should be acted upon without meeting with a qualified licensed insurance professional. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Interest and other guarantees in annuity contracts are subject to the claims-paying ability of the insurance carrier that issued the contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice.